Hey guys, Stockaholics. Appreciate you guys being here today. I hope you guys had an amazing Christmas and New Year or whatever holiday you celebrate. And I hope you had a great 2020. And if not, I hope that 2021 will be much better for you. Today I'm going to be talking about my views for the tanker market for the year of 2021. We'll be entitling this video, The Year of the Scrap. In this video, I'm going to be talking about oil demand and some projections for this year, as well as scrapping outlook for this year. This is a big component for a bull thesis for tankers. I'd like you guys to keep in mind that a smooth sea never made for a great sailor. And I'd also like to remind you guys that this is not investment advice. I'm just some guy on the internet. Make your own decisions. Now, I'm kind of a big picture guy, so I want to start this video today showing you guys a map from the IMF, the International Monetary Fund, showing you guys the real GDP growth for the entire world during the year of 2020. You guys can see on this map, there's a lot of a particular color on this map. Now, if there's a country on this map that has a red color, that means that it has less than 3% negative GDP growth this year. That means they had more than negative 3% GDP growth. If it has a yellow color, that means it has between negative 3 and 0% or no growth this year. If it's light green, it means it has a slight GDP growth from 0 to 3%, and dark green, which you may notice there are very few countries that have this color. They had 6% or more growth. Now, why is this important? Why am I showing you guys this? This is important because often when we think about oil demand, one of the main things that we can see as a driver of international or world oil demand is GDP and GDP growth. So when we see a large swath of negative GDPs around the world, it should come as no surprise that oil demand will go down. All right, so this is from the U.S. Energy Information Administration, and this is a very crude graph of the world oil consumption in 2020. Global crude and liquid fuels consumption sank in 2020 as the novel coronavirus swept around the world and disrupted daily life. You can see in 2020, we dropped to an average of 92 million barrels per day, and this source projects that we will see oil demand, a slight oil demand growth relative to 2020, up to 98 million barrels per day. Now, when you think about that last thing that I just showed you guys, where we saw negative numbers all around the world, I think this makes sense. I'm not projecting. It doesn't make sense to me to see that oil demand will shoot all the way to the moon somehow. We're going to see a massive V-shaped recovery beyond the likes of anything we have seen. No, it takes time to rebuild an economy. 2021 will not likely have increased oil demand relative to 2019. At some point, we are going to see oil demand higher than 2019, but I don't believe that it will be in 2021. I don't think that we're going to see this oil demand at least until 2022. And to kind of put that in another perspective, I'd like to show you guys this. I'm going to make a point of the oil demand during the global financial crisis, or the GFC. This is again from the IEA. And I'd like you guys to point out over here, and that world oil demand, it didn't improve until 2010 during the GFC. And often when we think about this crisis, it was during the year of 2008. However, the greatest demand shock to oil demand during this crisis didn't occur until the year following, or during year 2009. Now, the coronavirus has been more disruptive to oil demand than the GFC ever was. Again, think planes, think restaurants and leisure places being closed, think the government mandated lockdowns and the effect that that has had on both oil demand and the economies of these countries. Now, I expect in 2021, this year, that the the effects of the virus are going to start to go away. We have vaccines now. Those are going to be distributed around the world, and the virus is going to come away. However, we still haven't seen, like we have seen in 2009, the economic ramifications of those actions. And I believe that that is still going to be a damper on oil demand, at least for the remainder of this year. So during 2021, and by the way, this is the number of flights performed by the global airline industry from 2004 to 2021. You can see that we had a terrible year if you were involved in the airline industry. We went from about 40.3 million flights in 2019 to about 16.4 million flights during this year. And, you know, obviously it makes sense. You know, where can you travel because of all these lockdowns? What kind of, at least where I live in Hawaii, you know, we don't even have a tourism industry. For most of the year, we didn't even accept tourists unless they could prove that they were COVID negative before coming here. And that didn't even start until a few months ago. However, we have, like I've said, we have vaccines. And this, according to Statistica, they project a very slight growth. You know, however, some of the data that I've seen suggests that we could be a little bit more optimistic than this. I think that we will ultimately have more than this number of 22.2 million flights. And I think that that's because there's a pent-up demand for flights. You know, I often don't like to go down this route, you know, because that's often the counter argument to the demand recovery side of the equation for economic growth. But I do think that there is. And, you know, the coronavirus hasn't affected everyone. It's affected wide swaths of the populations. But a lot of the travel-related populations that were able to fly formally, many of those people can fly. And if we think about the elderly or the well-off population, because they haven't been able to fly in the last year, I think that there is going to be a significant, at least demand, probably during the summer this year. So personally, this is just an opinion. I think this number is going to be higher than this 22.2 million, but I don't think it's going to be higher than 2019 overall. I still think that we're going to see some destruction from that. But in any case, compared to that. But in any case, I wanted to show you guys this, and this is a video talking about why this is important in terms of oil tankers.
I disagree a bit. The market will eventually turn into our favor. It always does. And the best cure for low prices is low prices, as they say. But I think there's a structural problem in the market. I don't think anyone on the screen here today has ever experienced an 8% decline in demand that seems to be semi-permanent. Fortunately, we're in a business where about 5% of the ships on average each year go away. We know the order book is low, but as I said before we went live, when you're looking for a low order book to save you on the spot market, then you're really, you know, grasping for straws. But I think, you know, we are down about 8 million barrels a day. And as when people ask me why, I think there's one answer, and that's airplanes. It's like when Dustin Hoffman was in The Graduate and the guy at the cocktail party said plastics. I think our answer is airplanes. And the barrel per barrel correlation seems very highly correlated to airplane travel, especially long haul travel. And everything I read shows that the cars are back. They'll come back even stronger, so that'll pick up. On the airplane side, you're going to see less kids from the States going to Europe to go abroad, less tour groups, less bopping around the continent for a weekend. All these things, even though they may be safe, I think in the psychology of the consumer is going to be put off the shelf till next year, and then maybe a little bit longer and a little bit longer. It's going to be a lot more pain to see that sector come back, and that's a big driver in our industry.
Now, by the way, that was taken from a Capital Link conference earlier in this year, around late October this year. So there's probably been some slight changes in terms of these different guests' opinions. And by the way, those were oil tanker CEOs. But a lot of the theme that has focused this year has been the contango situations, the supply glut, and things of those nature, and less the demand side of the equation. And the reason I brought all this stuff up is ultimately tankers. The most important thing ultimately, at the end of the day, these guys are delivery companies, and for their business to be successful, they need demand side. They need demand for their deliveries. Now, because there's been reduced oil demand, because the storage situations, at least oil being stored on sea, that situation has been declining or disappearing over time. That has led to decreased rates this year. Now, if we many people earlier in the year were more optimistic. They said, well, seasonally, when we get to December, those kinds of November or Thanksgiving, we're going to see higher rates. And to some extent, we have. However, a lot of those rates still aren't profitable, at least the numbers that we're seeing lately for many oil tanker companies. And again, that's still because we still have diminished oil demand. All right, so I'd like to show you guys this. On the left-hand side, we have crude oil tanker earnings from roughly 2015 to 2019. And on the right-hand side, we have tankers sold for recycling for roughly the same period. You can see that in 2015 and 2016, oil tanker rates were quite high. They actually reached a high of $110,000, something similar to the rates we may have seen during the contango situation this year. There was a trough during the summer months and quickly elevated during the winter months. There was some seasonality at play here as well. But what we can see, at least from history, what we can learn, there was a oil glut. There was a lot of oil supply on the market. Not necessarily a huge shift in oil demand. However, that oil glut ended, and we can see in 2017 and 2018, rates were quite low for oil tankers. Excuse me. Now, I'd like to show you guys this as well. In 16 and 17, we saw almost no scrapping, and that makes sense because why would you scrap your ship? Even if it's old, even if your surveys or whatever is due, you're making tremendous amounts of monies on your ships. It doesn't really make a lot of sense to scrap your ship. However, after a certain period of time, even in 2017, even when rates were depressed, we saw that the oil tanker companies were still a little reluctant to scrap their ships, probably because they were flush with cash during this period. And ultimately, it took about a year for this scrapping to really pick up. And in this 2018 period, we saw a tremendous amount of scrapping. Now, I'd also like to show you guys this.
Sorry, Lois, go ahead.
As Bob says, usually have 5% per year of the fleet coming out. But as we know, in 19 and really 20, we haven't seen very many recycling candidates. And you know, when we run the analysis on history, not that it necessarily repeats, but it usually takes at least 6 months of you know, a depressed environment to really start to see vessels start to recycle as owners look at, okay, hey, you know, how much do I have to put into this 15 or 17 and a half or 20-year-old tanker or older than that. So I do think that at the levels that we're at, we should start to see some vessels taken out of the market, which we haven't seen, you know, probably 18 months. 2018, I think, was the big year where we really saw a lot of vessels that you know were made obsolete.
Okay, Bob, what about scrapping? You know, you have a very average. The industry has a very old average fleet age. A lot of vessels coming up to their 20-year, 22.5-year special surveys, what have you. We can see a scrapping pickup.
I think. First of all, you know, we all talk about how the market's going to look next year. I think, you know, most of these trends or analysts often draw out how long it'll take to recover for, you know, for demand or for supply, and they tend to write themselves faster than we think. So I think, you know, scrapping's certainly a part of that. You know, we've had older ships, and it's a really interesting dynamic as ships get older, especially the big ships with a lot of steel. You're looking at two very volatile markets, the VL market, the freight market, and the scrap market. And the difference between $300 a ton and $500 a ton, we all know is $200. But for people who aren't directly in the VL business, that's 200 times 40,000. It's about an $8 million difference in your scrap price. So what drives the demand for what drives the owners to scrap is the volatility of the scrap price, as well as the volatility in the freight market, and you know the waypoints along the way for special surveys. So to answer your question, there are issues on the subcontinent with scrapping with COVID. So that's held back a lot of the scrapping activity. Us owners are full of cash, and like anyone else with a pocket full of cash, you tend to be inclined to take another bet if you have the opportunity. So there's been a bit of a resistance to scrapping, even when it may be the national choice in the more difficult market. So as Lois pointed out, I don't think any Bs have been scrapped this year. Maybe one, none. It's either 1 or 0. And last year was a handful. So there is pent up supply of ships that should be scrapped. A lot of the older ships went into storage, and we're waiting for that to unwind, which is a threat to the supply of tankers coming into the market. But I think with rates where they are, a lot of those ships are 18, 19, 20-year-old ships in storage. And as they unwind, they'll probably go right to the scrapyard.
So there's a few points made in that video. First of which, there was an average of 6 months of depressed rates before we saw an uptick in scrapping. If we look in the year 2020 on this recycling graph, we can see that there has been very few amounts of recycling, and that makes sense to me because, first of all, earlier in the year we saw tremendous rates. You wouldn't scrap your ship when rates are quite high, and also there was a lot of surveys and those kinds of things that are also high expenses for oil tanker owners, and a lot of those have been deferred. Now, if we combine the fact that oil tanker rates haven't been that good this December, despite what some of people said that we would see quick oil demand recovery, we haven't. The rates for these oil tankers has still been low this December. And we combine that with the fact that these surveys, like I've said in some other videos, are going to be coming due in 2021. What is the logical conclusion you might make as an oil tanker owner? You might decide to scrap your ships. And there is further evidence to suggest that in a second. All right, so last thing I want to show you guys is this. This is a demolition market chart from the 14th of December this year. And there's a few things that I'd like to show you guys. By the way, these are scrapping rates for different countries around the world: Pakistan, Bangladesh, India, and Turkey. We can see for the first half of this year, scrapping rates were quite low. And simultaneously, we saw that oil tanker rates were quite high. If you pair those two things, we saw almost no scrapping in the first half of 2020. However, we began to see higher scrapping rates throughout the year. The second half, and then, by the way, there's a gap here where there was no scrapping due to the COVID lockdowns. And if you think about the depressed rates that we are seeing because of low oil demand, we still have many ships that are due for surveys, things like that. And if we see these rates that are increasing in terms of scrapping for those metals in those ships, if this trend continues, I expect to see a tremendous amount of scrapping in 2021. Now, it may take a few months, like one of the CEOs mentioned before. It takes an average of 6 months of depressed rates, and we have seen about 6 months of depressed rates. These tanker companies are still quite flush with cash, so we'll just have to see what happens. But I do expect to see some increased scrapping in the first quarter of this year. Again, we haven't seen very high rates for this winter season, and they'll start to come down in January and February, and we may start to see some increased scrapping. If those persist and the oil tanker companies begin to capitulate and realize the situation that we are in, I expect to see very high scrapping, perhaps in the second half of this year, and if it continues after that, the first half of 2022. Now, I know a lot of this might not be what a lot of you guys have been probably wanting to hear, but I'd like to remind you guys that good things, they take time. We're going to have to see scrapping for any bull cycle to happen. There is an oversupply of vessels, and simultaneously we have seen a detriment in the oil tanker industry through the hit that is oil demand. Now, at some point, there will be less oil tankers. Those less efficient vessels will come out of service. And at some point, not only will we see less vessels, but we will see an increase in oil demand. And when we pair those things with the average age of the entire fleet, well, there's at some point a bull cycle is inevitable. And I hope that you guys, whatever you decide to do, you make the best of of those good things.